Welcome to the Big Mike Fund Podcast, where you learn about advanced wealth building strategies from real estate investing to creating massive ROI and secured retirement profits. So pour yourself a cup of coffee, grab a notepad, and lean in. Because Big Mike has got the mic, starting now.
Welcome to the Big Mike Fund Podcast. I'm the Big Mike Zlatnik. Today it is my distinct pleasure and a privilege to welcome Lance Peterson. Hi, Lance.
Hey, Mike.
Lance is a managing partner in Redwood Real Estate Administration. Our fund administrator. We use Redwood. We love them. So, Lance, welcome to the podcast. I appreciate you taking the time to chat with me a little bit about what you do.
Yeah, my pleasure.
So let's start the conversation by tell the audience a little bit about you. Who's Lance? What do you do? I know you got a big family. You get up early in the morning and you work very hard.
Yeah.
You run Redwood Administration.
Yeah, that's right. Yeah, so a little bit about me. I mean, I identify myself as primarily an entrepreneur, right? Always looking for, opportunities and problems to be solved to help kind of add value. So therefore I've, really have a pretty diverse background, in IT and got into accounting. Most all the stuff is kind of self-taught. As Mike said, my wife and I, we have 5 children, ranging from, 15 years old to 5. So we stayed pretty busy. I'm an early riser, like the quiet time, an introverted guy. I like to think, and those sorts of things. I think for me, the common theme across my career has just been more of that outsourcing play. My first business was in IT outsourcing. So basically we're the kind of the virtual IT department for small to mid-sized companies. I'm the son of also entrepreneurs who, ran small businesses. So that's kind of where my heart is for the little guys, want to help people kind of be able to scale up their businesses and grow. And so that's what gets me up in the morning, is just trying to plug those holes, knowing that, there's so many varied things, especially in a complex field like, kind of real estate related stuff and capital management and, property management, all that kind of stuff. You can't be masters of all. It doesn't work. So.
I very much appreciate that introduction. So let's talk a little bit about Redwood and your niche. Your niche is small balance real estate fund administration. You're not going after the big boys. You are catering to the small entrepreneur with a unique strategy, whatever it might be. It's either a fund or a syndication. So let's talk a little bit about that. What is the typical client? Again, without revealing any confidential information. Mm-hmm. What's your typical client? What do they have in their administration? How many dollars and cents their fund or syndication? Maybe they're different buckets, but just.
Yeah. No, good question. I mean, I think that, the common theme across all of our clients is really that they rely on raising capital from high net worth investors, maybe family offices. So it's, very little institutional capital. So, in terms of like the average amount of capital that we see, I mean, I think that it's probably in the, mid-teens, maybe $10 million, $15 million on average of capital that they're managing of others. And really for us, what our play is really to kind of target, the real estate entrepreneurs that are making that kind of that step through. I mean, obviously many times people are using their own money, right? They start with single family, they do, duplexes, fourplexes, or the private lenders who start with, trust deed investing with other people. So we really look for when they're ready to make that next leap in terms of growth, which also comes with managing more of other people's money. So we'll start, when I call them, emerging sponsors, emerging managers, when that complexity starts to really take hold, that's really who we're targeting. And then I think, the beauty of this business is that, as we've seen with many of our clients over the years, I mean, we really launched kind of Redwood in 2013. So we're, 6 years into this now, is the fact that you really don't age out or outgrow us. I think that's the beauty of it, right? Is that we can grow right along with you. And then, from the investor's perspective, of course, there's that independence from day one. So I think that's what's really important for me, is that, all the little guys need everything they can get, right, to kind of, get to win investors' trust, right? And so by having someone that's independent, like we are, with reputation risk, we can't afford to be in cahoots with our clients, to do things that aren't above board, right? That would ruin our business. So I think that that's really how we see it. So it's a thing of, it allows you to give a little bit of a tailwind on the capital raise front. Investors get a little more comfortable, willing to kind of take that, that peace of mind, but also that operational burden, right, isn't as heavy there, all with an expense that's more kind of variable. So that's really what we're all about.
And that's a great point. So let me ask a couple of follow-up questions. The first question is, how much capital do you have in the administration? Which is an important confidence builder. We're not talking about, you're not a small shop. You have a sizable portfolio of assets that you're administering. Right? I think you have $1 billion.
Yeah, I think it's around $1.3 billion worth of capital that we administer, as of now, and we've got our sights set on $2 billion. So yeah, it grows fast, and we started at zero, like I said, in 2013, I guess. So
that's remarkable progress. I've watched you grow. Let me put it this way: we've certainly been working with you for a long time, and I certainly seen a lot of growth and acceleration. And you built in-house software, Marko, which is sort of your expertise, being having IT background, and it's all become part of the Redwood offering. So let's talk a little bit about the difference between in-house versus outsourced fund administration. What are the pros and cons? So somebody's trying to do administration in-house. Why should they consider doing administration outsourced? As you said, it might give investors more confidence that their books being administered by a third party. Beyond that, what are the benefits investors and fund managers or syndicators get by working with you?
Sure. In terms of like the benefit of like in doing it internally versus externally, I think that to me the big thing is cost. And then complexity, of course. So as capital management firms grow and they have more investments and more moving parts and things like that, it just means that you're going to have to continue to hire additional headcount, right? And so I always say, humans come in wholes. You can't buy fractions of humans. It doesn't work very well, right? And so that's when you really look at that, especially for kind of emerging companies. It's just, that's the killer when you hit that thing where you just have way too much work for one person and you got to move to two people. Right. So I just think from my perspective, that's the thing. And when you look at the investment to build a back office, it's significant, and there's a lot of growing pains and a lot of things you have to do. And it really is not a strategic differentiator, right? It just isn't. So in the marketplace, it's table stakes. The expectation from the investor community is that it will be right, it'll be accurate, it'll be on time. So really, you vis-a-vis the competition, having your own internal back office really doesn't add anything. So to me, what it does is it deflects and takes away from what you could be working on, which would be actually creating true strategic differentiators in the market, right? Because we know that, at the end of the day, all of our clients are deal makers. It's all about the deals. It's all about finding that next investment. So, and that's not easy. And there's a lot of competition in the market for deal flow. And so if you're wasting all this time on, trying to build a back office, and you've got turnover and people are, and once again, and it's not your thing, you're a real estate guy, you're not an accounting person. I just think that's my whole thing, and if you've already gone down the road and kind of made that investment, I get it that it's hard to unwind it because these are people, right? So ultimately, if you make the decision to move it, to outsource it after already having built it, people more than likely will lose their jobs. And, in my experience, many people aren't really comfortable with doing that. And I totally understand that. But, I just think that, so that's kind of how I look at the internal versus external. From a non sort of peace of mind for investor standpoint.
Yeah, a couple of brilliant points. I absolutely agree with you. You can't hire a partial person, and scaling gets really hard when you need to bring in a person or two and you don't have redundancy. And this is a specialization trade. So you come in and you have redundant organization and the software and everything else. And building it in-house is incredibly hard. You have to have very significant economy of scale. I don't know how much capital you have to have under management, but certainly not for small entrepreneurs that are managing $15 million fund, $20 million fund. They need to be close to 100 million and up to even consider doing this in-house.
Yeah,
so for sure, what you provide is very valuable and helps fund managers and deal makers and shakers, syndicators do what they do best, find the best deals and raise capital and do that. So that makes a lot of sense. Let's talk a little bit about your software. So it's called Marko, kind of cute name. I don't know who came up with the name, but maybe you have a little color why it's called Marko. The other question is, what does Marko provide? Just kind of explain. I certainly know it provides access for people to subscribe to investment, also publishes statements. But talk a little bit about that. What are the key benefits, and why is it called Marko? How did you come up with that name?
Sure. Yeah, so I mean, the name Marko, it's Marko. For one, it's a technology platform, and so that we knew people would be using on a daily basis, and so we wanted to kind of personify it. And when we kind of decided we wanted to be a personification, for me, the name Marko comes from a guy named Harry Markopoulos, who was the whistleblower in the Madoff case. So, for us, like I said, I mean, this is really our unique position, right? Is that we really are the kind of the independent third party that sits in between. And of course, the Madoff case really was a game changer in terms of how these private investments are managed, and it just had a ripple effect, of course. So for us, we really know that we're in the transparency era now. And that's what the winners are embracing transparency, and the losers are the ones who are remaining, with a more opaque front, right, when it comes to their investors. So when we started to build the tech platform, we really are trying to tackle a lot of problems that there's just so many moving parts. Like I was running down the number of regulatory bodies that cross sort of our desk and that we have to be concerned with, and it's amazing, and it's crazy. So for us to build it, this is a very complex sort of thing, but but case in point, it all goes back to that investor reporting, right? Is that there's so much redundancy in people touching information 4, 5, 6 times. I mean, it's so inefficient. It was just in the dark ages, right? So for us, it was a matter of how can we kind of streamline that from one end to the other, cradle to grave from the investor's perspective. So that's really what Marko is today. I think that in 5 or 10 years from now, Marko is really going to be the operating system that runs really the whole back office of the capital management, down to the asset level, all that sort of stuff. So today it does, it subscribes investors to the place they can log in, they can see their, download the capital account statements, see their activity history. It obviously is the tool that drives all of the math. In terms of the allocations, you've got, as Mike, with a net asset value fund, you've got unit price fluctuations, unrealized gains, all those different things. Running that kind of stuff in Excel, you're just asking for it, right? You've got multiple unit classes, you've got sidecar deals, you've got all this stuff. And so for us, especially at scale and at volume, we can't lean on sort of Excel spreadsheets. That stuff falls apart. There's formula errors, and it's no good. So software is the way to go.
Yeah, agreed. I'm not questioning the need for a software with a backup, with audit trails and with reporting and everything else. So that is absolutely the right way to go. But I just wanted to kind of focus on the primary benefits. It's investor portal to subscribe, to get the statements, to change quarterly allocation and things like that. And the fund managers also helps us to track our investors and who invested what. Is the paperwork compliant? Also, I think you have a create an investor verification service, which is also important. So things like that, and so we appreciate the software. So next question is how, again, a running fund administration company, what's been your observation on how is it different to administer funds versus syndications? Because you do both, and they're a little different beasts. Are they pretty similar? Are there distinct differences? Just curious.
Yeah. So, I mean, it's, the funds are obviously have more of that, a syndication is easy. There's one asset you have to keep track of, and there's a handful of investors, and when they put their capital in, they're pretty much in. It's completely illiquid, right? So there's no redemptions you have to process. Of course, the accounting is usually pretty straightforward as well. In fact, most of the accounting is handled at by a third-party property manager, on development projects, stuff like that. We can do that. So it's just simpler, I guess, right? There's just not as many moving parts. Whereas in the funds, you've got multiple assets, right? You have oftentimes audit requirements. So it's much more stringent in terms of, you have, GAAP compliance and making sure that everything is dialed in. And of course, a lot of the complexity in most of these just comes with the waterfall calculations and, and all that with multiple classes. And then depending upon the strategy. So, especially we've got funds that have, 2,000 or 3,000, non-performing loans or, small notes with, or tax lien certificates or even loans like Mike. I mean, once you have a portfolio of loans that's, 100, 150 loans, 200 loans between the originations, the payoffs, construction draws, all that kind of stuff. There's a lot of moving parts. So that's what a fund represents, right? It's just a bunch of investors, a bunch of assets, bunch of moving parts, lots of things to keep track of. So
yeah, that's a good point. Syndications is certainly a whole lot easier. If fund is sort of syndication to the nth degree or set of combined, at times the fund invests in many syndications. So it's we do invest in a number of deals, and I guess I appreciate the work that you and your team does to keep the books straight, and it certainly helps me as a fund manager have outsourced books. It's like an outsourcing department. So the complexity is there, and that's why your software is fairly robust, so you can adjust for all these complicated conditions.
Yeah.
So a couple other very quick questions. So how do you work with just curious? And again, I certainly know it, but for the audience, funds like ours get an annual audit, and that process, we just went through our first annual audit, and it was a fairly smooth process. I actually felt pretty good that the auditor, I guess they came to your office and then they worked on some stuff, and they were able to get it all done. So any thoughts, comments, how you work with third-party auditors to make sure that the books are audited and the auditors are able to express their opinion on the books?
Yeah. So, it's interesting when we kind of structure the work that we do, everything is right. We work from the audit, or the K1s backwards, right? So throughout the year, everything is moving toward, we know that at some point this is going to be audited. So what we do that sets up a situation where audits can be successful and run smoothly is that along the way, we're always have an eye toward how do we need to save things and store things and structure things and schedules and, all those sorts of things so that they can be audited. And, that's what I learned kind of when Matt and I were, running our own kind of, debt funds and that sort of thing, when we had all these field audits from our senior lenders and stuff like that, is I realized that once you learn what their playbook is and what they're looking for, then you should leave a trail throughout the year that basically makes it so that you can just zip everything up and just say, here you go. Right. And that's how we do it. And it's kind of one of these things, it's hard to it sounds like, oh, duh, of course, Lance, who wouldn't do it like that? But the reality of it is that it's one of these things that we do that I think it's hard to really express that to just the layman, like why that makes such a difference. But that's why, tax preparers and audit firms, they love working with, mutual clients of ours, because we make their lives as easy as they can be.
Yeah, that's a great point. Our certainly first audit, audits are never fun. It's one of those things that it's a rubber stamp. If you get unqualified opinion, meaning that you have good books, and that's a lot of work just to get a kind of a rubber stamp that you have good financials. So the goal is clear, but the work is not exciting. It is a lot of mechanical work, and it is of paramount importance to do it like you mentioned, in a well-organized manner. If it's done properly, and I remember the whole process. The auditors started looking at the Q1, 2, and 3 books, and they went through all those records. They started working with you, got all the stuff, audited it, and then when the Q4 books closed, they audited that, and then they assembled the whole thing.
Yep.
So I certainly give you a lot of credit interacting with them. It was our first annual audit, and I have to say, we felt happy, and it worked out. So thank you for running organized books.
No, yeah, no, our pleasure. Yeah, but when they do go sideways, it gets pretty gnarly. I mean, when you're, the back and forth requests, and it can be 20x more stressful than probably what you experience, and it's not fun. So.
Yeah, so that's the key reason. Whoever is listening, if you're a fund manager or syndicator considering third-party administrators, working with somebody like Redwood saves you a lot of time. They're well organized, and they are continuously improving. And that's a time saver and a money saver to actually work with an organization like that. You may feel you want to do it in-house. Well, good luck with that. I certainly am a big opponent of outsourced third-party, and for small balance real estate entrepreneurs, Redwood, I think, is one of the best organizations that I know today. So that's my 2 cents. Any other quick thoughts or comments? Is there a good book that you recommend folks should read? Is there best practice? Anything that works for you? Obviously, Early to Rise is a good practice, but any other just good entrepreneurial advice?
Man, I mean, there's so many good books. I mean, I guess that, my advice is, like, for me, Audible is a safe, and I tried to listen to at least, 3 books a month, on 2x speed, sort of thing. So to me, it's like a volume thing. The more stuff you kind of expose yourself to, I think it gives you more ideas and things to work on. But, no, I mean, I don't have, anything other than, I mean, obviously a book I can recommend is my business partner, Matt's book, Capital Attraction. If you're just kind of getting in there, trying to get a lay of the land, I think it's a great sort of intro into, maybe setting the appropriate expectations about, how one is going to build maybe the capital management side of your business. I think that everyone wants to believe there's a silver bullet and there's a shortcut. And it's just, I think the sooner you come to grips with the fact that it doesn't exist, the better. Once again, it's good to know what all the options are and know where all the sources of capital can come from and things like that. I mean, it's great to have the lay of the land, but just because that that it exists or whatever, you have to be real where you're at, right? So I think that those are the things that to keep in mind is that this is a steady wins the race sort of. This is a linear thing. These are not hockey stick businesses. And anyone that you've seen has done the hockey stick thing in this, good for them, but they're one in a billion. And it's just, the rest of them are just plodding along. It's the long game. So.
Yeah, I agree with you. Thank you for recommendation of the Audible. I agree with you, except for I can't keep up with 2x speed. I could do 1.5 times. That's my practical limit. I've tried 175.
That's respectable.
So you're a little bit faster than me, but I agree. It's a steady Eddie game. So it's kind of interesting. I was listening to the other day. We're almost out of time. As the final comment, I was listening on CNBC, and Shaquille O'Neal was on as a guest. It was yesterday. And just chatting a little bit about his business and his success. And it's interesting, when he was younger, he said he'd give somebody $1 million when they promised him, hey, listen, in 10 years, it's going to be worth $100 million. We're chasing home runs. And a lot of times he said he would do no due diligence, just write people $1 million check, being a basketball superstar, and hope and pray it works. Right. But it's very different in traditional real estate. It's a very steady game. You're trying to generate low double-digit returns, predictably steady, with managed risk, and it's not about the home runs. It's just about maintaining single after single after single, and not getting away with not getting too ambitious nor getting too relaxed. It's all steady Eddie wins.
That's exactly right. That's right, Mike.
I appreciate your wisdom. I appreciate you sharing. Thank you kindly. And how would people find you?
Sure.
What's the website? Where should they go to if they want to talk to you about?
So just go to redwoodrea.com, redwoodrea.com, and then I've got a little chat bubble in the lower right hand corner. You can just start chatting with me there. I've got the HubSpot app on my phone, so we can exchange messages and get a time on the books. I usually spend 15 minutes just learning about people, and then if there's a there, we can go further. If not, then we got a new connection and we can move on. So
thank you, Lance. I appreciate you. So redwoodrea.com is the website.
That's right.
Thank you so much.
Thank you for listening to the Big Mike Fund Podcast. To receive your copy of Mike's How to Choose a Smart Real Estate Fund book, head to BigMikeFund.com or visit Amazon and type Mike Zlotnick. Keep listening and keep investing Big Mike style. See you on the next episode.